What if Social Security taxes were completely eliminated? Could it really happen? Well, it sounds like a dream come true. There's some major hurdles standing in the way. Today, we're going to dive into why the current proposal to eliminate taxes on Social Security benefits might not be as simple as it seems. We'll break down how Social Security even got taxed in the first place, what Trump's proposal actually says, and how much you could save, and the hidden challenges that no one's really talking about. So let's kick it off with a question that probably bugs a lot of people. Why is Social Security even taxed in the first place? I mean, we pay taxes on it when we work, and even our employer kicks in a little bit more on our behalf. So why isn't this a tax-free benefit when it comes back to us? And doesn't this feel like double taxation? So it turns out it wasn't always taxed. In fact, when Social Security was first launched back in 1935, the idea of taxing benefits was completely off the table. It was promoted as a tax-free safety net, a way to ensure that Americans had some financial support when they could no longer work. Fast forward to 1983 and the story takes a big twist. The government realized that Social Security was running into some serious financial problems. People were living longer, the workforce was shrinking, and the system was bleeding cash faster than a melting popsicle in July. So in a bipartisan move, yes, Democrats and Republicans actually agreed on something. Congress passed a law to start taxing Social Security benefits for higher income retirees. So at first, only 50% of your benefits could be taxed if you made over a certain amount. Then in 1993, they cranked it up again. Now up to 85% of your benefits could be taxed for even more people. So here's the kicker. The income thresholds they set back then were never adjusted for inflation. So a lot more retirees end up paying taxes on Social Security today, even though they may not feel wealthy at all. Okay, so to sum it up, 1935, no taxes. 1983, 50% of benefits taxed for higher income earners. And in 1993, 85% of benefits were taxed. Now today, even middle income retirees often get hit because remember, those numbers were never adjusted for inflation. Pretty wild, right? Now let's fast forward to today and what's actually happening. In early 2024, Donald Trump announced that if reelected, he would push for eliminating federal taxes on Social Security benefits entirely. He said it was going to be a way to give seniors the retirement they earned and deserve. But Trump isn't the only one talking about it. Republican senators like Rick Scott and Josh Hawley have introduced or supported similar ideas, and even some Democrats like Bernie Sanders in the past have floated different versions of making Social Security benefits tax-free, although with his solution there was more taxes on the wealthy to fund it. So what does Trump's proposal actually say? 100% elimination of federal income taxes on Social Security benefits. And this applies to all retirees, regardless of income level. Now, these changes come with no new taxes mentioned yet to replace the revenue lost, which the lack of proposed legislation to replace any lost revenue from eliminating Social Security taxes is a bit of a concern as it shows some short-term thinking without consideration of more long-term health of the Social Security program. But first, let's talk some numbers. So how much could you actually save? Now, Social Security uses something called provisional income to determine what percent of your Social Security is taxable. They do this by using your adjusted gross income, now listen to this, and adding it to your tax-free income, think municipal bonds, and then adding half of your Social Security benefit. So you add these things up and this all adds up to your provisional income. Now I'm going to pop some numbers up on the screen, but focus on the married filing jointly number. Under current law, and remember this hasn't changed in many years, if you're married filing jointly and have provisional income of over $44,000, so that was the calculation that we just made, and you're reading that correctly, 85% of your benefits are taxable. So let's do some math. The maximum monthly benefit in 2025 for someone who retires at full retirement age is $4,018 a month or $48,216 a year. This assumes that they have the highest possible earnings history and that they claim at full retirement age. For this individual, assuming that they're married filing jointly, and let's assume for sake of example that they're in the 22% tax bracket, they would pay $9,000 in taxes on their Social Security benefit. So if Trump passed this plan, this couple would save over $9,000 in taxes. Now, double that, assume that they both have the same Social Security benefit at some point in their lives. That would be $18,000 a year. So when we do financial planning for clients, $18,000 a year, year over year in retirement, that's big bucks. I mean, that's a few extra vacations, a new roof, or just less financial stress every day. But here's where things get a little messy. Remember earlier when we talked about Social Security running low on cash? The problem hasn't gone away. It's actually worse now. So according to the 2024 Trustees Report, the trust fund could be completely depleted by 2033, leading to an automatic 23% cut in benefits if nothing else changes. So this means that in 2033, your benefit could just get cut in 1 year. And right now, the taxes on Social Security benefits bring in about $50 to $60 billion a year for the Social Security Trust Fund. So if those taxes disappear, that 50 to 60 billion vanishes too. So now remember, that 23% in the 2024 Trustees Report, that 23% cut assumes that taxes are still being paid on Social Security. So they're assuming that the trust fund runs out and that the future benefits of Social Security are being funded solely by the taxes, essentially. So if we eliminate taxes on Social Security and that 50 to 60 billion goes away every year, then the trust fund could run out even faster. And the cut in 2033 or before that, right, could be even more. So is Trump's bill proposing anything to replace that lost money yet? The short answer, no, not yet. No official funding mechanism has been proposed alongside the idea of eliminating taxes. That can mean either separate legislation would be needed to fund Social Security another way, or more than likely, nothing happens until Congress has to act. Not exactly what you want to hear, but as they say, history doesn't always repeat itself, but it often rhymes. And when it comes to Social Security, Congress is like a college kid with a 20-page paper due tomorrow, except the paper's 88 years overdue, and instead of writing it, they're arguing about what font to use. So what does this all mean? The proposal to eliminate taxes on Social Security benefits presents a complex situation. Concerns center on the potential fiscal impact of eliminating a significant revenue stream without a corresponding plan to maintain the program's solvency. Of course, the proposal's appeal lies in its potential to provide financial relief to retirees, many of whom feel burdened by what they perceive as double taxation, and rightfully so. While retirees deserve relief, eliminating taxes without a plan to replace the lost revenue, estimated at 50 to 60 billion annually, could severely jeopardize the program's long-term viability. This could lead to benefit reductions for future retirees. Alternative solutions exist, and for more information on this, check out my video on whether or not Social Security is going away. But some of those things are adjusting payroll tax rates, utilizing general revenue, or modifying future benefit calculations. However, each option presents its own set of political and economic challenges. Thank you for watching today. My name is Zach Morris, and I'm the founder of Paces Ferry Wealth Advisors. If you've enjoyed the video, please go ahead and subscribe and hit the like button. Thank you.